Morning, Steve Freed in Chicago with the morning grain comments. Friday we had a pretty weak close in the beans and the meal and the oil. A little bit of follow through overnight, although beans are about unchanged. Corn's down a little bit, wheat's down a little bit. Outside markets are reacting to the report that Japan is now in recession. Also at the G20 meeting, Russia left early. Most of the Western countries were putting pressure on Russia about Ukraine, and so we'll see if there's additional sanctions against Russia because of the issue there. Here in the United States, it's cold across the Midwest, and we'll see if that slows any movement down or increases any feed use for the livestock. Today we get the October crush data, a big range in what this crush should show. It should be better than September, but less than last year at this time. I still feel like the domestic Eastern meal basis is still firm. We still haven't fixed the rail situation there, and that could provide some support as we get closer to first notice day for December meal. There was an increase in soybean deliveries on the November contract. As far as South American weather is concerned, Brazil getting rain, Argentina and southern Brazil actually drying out, allowing for plantings to be completed. And then the long-range maps look for mostly normal weather across most of South America. So anyway, we'll be kind of looking ahead at what we're going to trade, the lack of farmers selling, and maybe the slowdown in demand for new bean exports out of the United States. Still a slow corn export demand, but we're also watching pretty closely some of the weather conditions here in the United States because of cold weather and Russian cold weather, and whether that's going to affect the wheat market. We did see the funds add to their long positions in corn and beans last week. They didn't take off as much wheat short as we thought, and that makes the market kind of vulnerable for some choppy trade here over the next week or so. So when we look at the numbers, there is a wide range in the guesstimates for U.S. soybean carryout, as low as 350 to as high as 550, and most of that is the demand numbers and where we think they're going to be. USDA is at 450. In the corn, everybody has about 100 million bushels more than the USDA due to lower export demand, and the wheat, everybody's pretty much got the same number. When we look ahead at 15-16, on Friday we got some guesstimates. The farmers are going to plant about 2.5 million less corn acres and 4 million bean acres, keep wheat acres about the same. So that could actually lower a little bit the corn carryout, but could raise the bean carryout, assuming normal weather. So anyway, choppy trade, maybe leaking a little bit lower into first notice day on the December contracts. Watch the December meal, and then we'll see if we are in a trading range through the remainder of this calendar year. As always, these are my thoughts, not those of ADM or ADM Investor Services, and have a safe and profitable trading day.